So we all have our opinions on the economy, and if you have followed for a while, you know that Greg and I give you the real talk, not the media spin on where we are at economically. Be that as it may, you may agree with us or you may disagree with us, but that's banter. That's what creates the world to go round and round. That's why we have a world where we are all allowed to think freely and have our own opinions. There's all sorts of topics that cause many people to really separate from one another, no matter how similar those people may be or how aligned their morals or outlooks of life are. For example, do you support the right or the left? Are you a fan of the Yankees or the Red Sox? You know what? I'm neither. I'm a Twins fan. Screw the Yankees, screw the Red Sox. Don't like either of them. I'm a Twins fan, die hard. You got the Bloods versus the Crips. Potato, potato. Pineapple on pizza or no pineapple on pizza. There's just plenty of things that people absolutely love to argue about. But when talking about saving money, there is no disagreement. We are all told to do it, and we're all told to do it starting at a very young age. I started a Roth IRA the minute I turned 18, and I started my son's many years ago. He just turned 18. He's got money socked away in that, thanks to my business. It's a great thing to do. We're all taught to invest, put away money smartly, and keep 6 months of living expenses in an account at all times in case we lose our job or have something break at home like the washer, the dryer, or anything that just comes up unexpectedly. We're also taught to live within our means, which clearly is not happening right now with credit card debt at an all-time high. Come on, people, reel it in. You don't need the Louis Vuitton right now. If I've learned anything over the last 10 years covering the economy, it's that we always have to have an open mind to new ideas, technology, and investments. On that note, did you know that one asset has outpaced inflation? Yeah, it has. Do you know what that is? If you guessed Bitcoin, pat yourself on the back. The widely debated and often volatile digital currency, you absolutely nailed it. But when you look at the numbers, its volatility should be something that shouldn't be a concern if you are a long-term investor. In 2023, it significantly outperformed the S&P. And I'm not going to go on a rant about Bitcoin today, but I just thought it was worth pointing out because no matter what your age is, you should have some sort of exposure to cryptocurrency. The world is moving currency. Ours is failing. We're moving around things and new technology is coming out. But aside from that, let's talk about how to protect your retirement savings from inflation. Let's just say you don't want crypto. Number one, regularly review your portfolio. Remember to revisit your portfolio regularly and consult your financial advisor. See what assets or industries you may be willing to try and what trends or possible events that could affect the growth of your nest egg. For example, AI and crypto is starting to boom. Growth has been so fast, but as I mentioned earlier, it's been volatile. It may be worth considering, but only if you have the financial bandwidth to survive the volatility and you have a longer frame of mind to invest. You got to be at a younger age. I wouldn't do this in your last year. Number two, maintain a hedge. We go through an economic downturn every 5.5 years on average. In each downturn, you need an asset that will retain its value while you wait for your others to recover. Now, there's a few different hedges, but the best one is gold. There's a link below if you want to take a gold investing quiz. Do that or don't. But gold is the best one to just hold a small amount of in your portfolio. It's gone up historically every time we have an economic downturn. And that's science. It's math. It's also outperformed the market and bonds. Number three, keep an emergency fund. Think of your cash stash as the superhero cape in your financial wardrobe. Sure, inflation might nibble at its edges, reducing its swish over time, but when prices soar and you need to swoop in to cover those must-pay bills, you will be very glad that you have it. But there's a plot twist. Your retirement plan isn't a set and forget, like a crock pot type of recipe. It's more like a fancy dinner party that needs constant tweaking. Changes in inflation rates, market mood swings, or even your own life script might call for a menu change. Using planning tools or teaming up with a money maestro, be sure to pick the right inflation seasoning. I'm a kitchen guy, I love to cook. And for the grand finale, if you're still playing hard to get Social Security benefits, remember these beauties get a makeover with inflation. Playing the waiting game might just turn into the best act of your retirement show. Number four, the risky pile. Stocks have historically averaged annual returns well in excess of average inflation. This fact makes owning stocks in your retirement portfolio one of the most effective tools available to protect your savings from sustained inflation. However, new asset classes, like I mentioned, cryptocurrency, may provide you with higher yields if you have the financial bandwidth to withstand its crashes. This is called the risky pile. These are assets that grow fast but can be very volatile at times. This is ideal for people who already have the foundation of their portfolio down and have the extra funds that they can risk. I'm Tim Schmidt with Tech Economy. Only Bitcoin outpaced inflation. Got a little bit of time horizon. I'm 45. I got plenty of time on Earth, I think. Get some exposure to cryptocurrency. But if you don't, if you're in the older years, look at the other methods that I talked about. If you're in your 60s, you're going to want to have some exposure to gold, especially if you think we are going to turn south like I do, because I don't believe the mainstream media. I don't care if you're right or you're left or you're in the middle. Things are not great. We've got 3 wars, inflation's out of control. We keep firing up that money printer left and right like we're at a strip club throwing a party. It does not make sense to me. I don't think a soft landing is imminent, but wherever you're at, you should have a small part of your portfolio in something that is a safe haven asset. Catch you next time.